Hi, what's going on, everybody? Chris Franks with TexasWest Capital. I've got Andrew sitting in the wings here, and we don't know. Maybe Tillman will show up. Maybe, as Sats had suggested, he's stuck at the craps table. I don't know. He's got his family there, so I doubt he's stuck at the craps table. But hey, we'll see. Anyway, listen, guys, we've got some updates coming from the Bitcoin conference, which is where Andrew's at right now. Of course, their company, Arch Public, just putting their scent all over everything, right? I mean, you look all over there. They've got, they got this well room, and they've got all this kind of stuff going on. They've even got a room where they've got chairs and water and stuff in it. I mean, we've talked about this the last few weeks, so we'll have to see how that room is going as well. But anyway, Andrew's going to give us some updates about some of the stuff that's going on there, some of the interviews that have happened and news that's been released. We'll also talk about Trump Media is raising $2.5 billion to start their Bitcoin treasury. And of course, we've got what else? We've got GME finally out there buying, as Andrew has mentioned. I'll go ahead and pat him on the back right here. He said that was coming. Just about 4,200 Bitcoin though, $500 million, well below what they're actually hoarding in cash. So we'll see what Andrew thinks about all that as well. Be sure to hit the thumbs up, hit the like, hit the subscribe, hit the follow, guys. Do all that. Follow us on X. Andrew's trying to become the KOL. So make sure you follow him at AP_abacus. And if you're feeling bad for Tillman, toss him a line. Follow him as well, TexasOL61. And as always, you can follow me at TXWest Capital. By the way, guys, here's the book. It's out. You can get it. Go to Amazon. Forked Nations, Volume 1, Consensus Broken. Look at that. 470 or so pages of beautiful Bitcoin nonfiction. So jump in it there. Okay, guys? Let's see. Here's Andrew showing up here. My man, what's going on, buddy?
Yo, it's 2 days of fun and frivolity and insanity here at the Bitcoin conference. Yesterday was industry day, which is supposed to be kind of the most chill day. You get about 10% of the entirety of the conference goers show up for that day because they pay extra, and it was packed. I mean, it was absolutely packed. So I can't imagine. I've yet to abscond from my hotel room yet this morning. I don't know if everybody's noticed, but this AM at 9 a.m. Las Vegas time, I think JD Vance is speaking right now, or he may have just finished up. So you either had to be in the room. We can't even get to our Arch Public Lounge because of Secret Service. They shut everything down while he was coming and going, and then having his talk. But it's been fantastic, man. There is so much going on. I will say that the Bitcoin treasury movement is at a fever pitch, meaning that companies that are standing up themselves and their entire thesis is to buy Bitcoin with whatever amount of money that they raise is extraordinary. I mean, it's truly extraordinary. We're going to go from 21 Capital and Strive and Strategy, MicroStrategy, and Nakamoto now. That's 4 or 5 off the top of my head that I'm aware of, and Pomp's thing that he put together. So let's call that 5, in the news Bitcoin treasury, pure Bitcoin treasury companies. My guess is that 6 months from now, there's going to be 100 of those. There's going to be 100 of those. And I'm not kidding. The amount of commentary and people that are raising money. Here's why people are raising money to do this, and here's why it will continue until there's a crack in the foundation of the thesis. So the Nakamoto raise and process with BTC Media, the CEO, and what they did. Did an RTO and a pipe, and an RTO is basically code. We're going to go take over an already public zombie company
Yeah.
we're going to, effectively make that ticker symbol ours, and then we're going to change the ticker symbol, but it'll be our company. It'll do what we want it to do. So everybody that put in money into that company, I think they raised $700+ million. They all got in at $1, right? So that transaction happened at $1. Do you know what NACA is trading at currently?
No, what is it trading at right now?
As of yesterday, it was trading at $27. So everybody that put money into that Bitcoin treasury company, which, by the way, came after Strive, came after Capital, even came after Pomp, essentially, they've got a 27x return on their money as it stands today, right? A 27x on their money. So, Chris, you tell me, if people putting money into these Bitcoin treasury zombie companies, is it going to slow down if you're getting a 27x return on your investment inside
Not even.
of 3
People jump in that.
No
Yeah.
chance. No chance. By the way, you and I both know that in traditional finance, the idea of like a reverse takeover, ticker symbol, zombie company, but we want it because there's some liquidity there associated with its ticker symbol, blah blah. That type of transaction on Wall Street 10, 15, 5, 20 years ago was literally the lowest of the low type of transaction, right? It was, I can't really describe, there weren't even meaningful investment, even third or fourth tier investment banks or fifth tier investment banks that would even engage in that stuff. It was just seen as, maybe there's a couple of guys with an extra money because they just want to goof off and hope that they can take a penny stock and turn it into $2. That's what those transactions looked like on Wall Street. Nobody would touch them. By the way, there's this sphere right behind me right there. I don't know if anybody can see my thumb. There's the sphere moving around. Anyways.
No, we can't see it. It's too bright.
Yes. There you go. So those transactions were seen as like, not only could you not sit at the cool table, but they're like, we don't even want you, stay 100 feet away from our school, right? You've been, so not cool transactions, like not, but you insert Bitcoin into the narrative, it changes the narrative. You insert a 27x into the narrative, it changes the narrative. So I'm just telling you right now, in terms of institutional conversations, in terms of VC conversations, the Trump organization just announced that they're going to buy $2.5 billion worth of Bitcoin. So they're the next Bitcoin treasury company, right? So this is going to happen. It's going to happen at light speed. I think it will have a material effect on Bitcoin price to the upside. Where do we go? Where are we a year from now or 2 years from now with this trend? I don't know. I would be concerned about it. I think it will, I think it will be a bubble. I think it will be a bubble in the space. Bitcoin treasury companies will turn into a bubble. But at the same time, a bubble is rounded, right? So if you're starting out at the bubble over here and you ride it up to here, even if you get off over here, you still did pretty well. But if you got into the bubble up here and you wrote it down there, that's bad, right? It's not it's not all that different from the whole SPAC process. So 4 or 5 years ago, SPACs were all the rage. And in the first 6 to 12 months, SPACs exceptionally well. They were a very efficient way to raise capital, a very efficient way to access the public markets. They raised enormous amounts of money for all sorts of different reasons, and made people a lot of money, unless you stayed too long. If you stayed too long, you got absolutely crushed. So I think it's going to end up looking like that. I think it will push the price higher, for the next 6 to 12 months. After that, I don't know. We'll see.
Yeah. Yeah, I think you're right on that, man. And you touched on a point that I'm real, conscious about always talking about with traders. Because I teach traders every day, and in a lot of their questions, especially if they're coming from crypto, is in this thing. Well, isn't this a bubble or isn't that a bubble, or what about this and that? And I said, listen, it doesn't matter. If you're trading, then you're trading, right? You can trade the junk that's out there. People make ridiculous livings trading trash, trading junk in the markets. But you have to understand what you're trading when you trade it. Now, I'm not trying to say that Bitcoin is junk or trash, but what I'm saying, though, is when you're looking at what Andrew's talking about here, which is this idea that everybody's jumping all in on the Bitcoin treasury thing now, inevitably, it's likely to be a bubble. And you're going to get a pullback. We'll say a pullback from that. Everybody will say it's a crash at the time. We'll just say it's a pullback because ultimately you're going to end up higher than where you were, a couple of years prior. It's always the thing about bubbles usually is that they, every new high in a market is basically a bubble, right? It rises up, it breaks, comes back down, rallies up, makes a new all-time high, breaks, comes back down. It's just you have to be honest with yourself about your time frame and where you're getting in at. If you think you're going to just start your Bitcoin journey in 6 months from now, we'll say, right, and we'll say that's probably the top, or about 6 months. We'll say Q4 this year. And if you decide to jump in there, you got to be honest with yourself and say, listen, this is probably going to be the top. But what is my conviction in this? Do I believe that Bitcoin has a future? It's going to continue to rise overall, even after the temporary setback that we're going to see. And if it is, then okay, so what? You're buying at the top. Now emotionally, we don't like to buy at tops, right? We like to think that we can sell tops and think that we can buy bottoms. And what we're actually saying is we believe that we can sell the highest, most price and buy the absolute lowest price. And, that isn't the way it works. So, kind of be more realistic in your expectation when we come to it. Understand that I believe I'm on board with Andrew here. I think it's probably going to be a bit of a bubble with this because historically that's what happens in markets, right?
Yeah. So a good example of this is not last night, but the night before, I played blackjack, right? And I started out with $1,000, and I wrote it up to 3, and I got off the table. Right. And then, everybody was still kind of hanging around doing some stuff. And then I went back and I turned 3 into 5 and, hung around. And then I went back and I turned 5 into 7. And so, but at that point I said, listen, I'm not going to press my luck anymore. I've sat down 3 times. I've won 3 times. And there's a good chance that there's a reason why these casinos exist. And so I'm going to cash out and walk away. That has to be the way that you think about this Bitcoin treasury movement. It has to be the way that you think about it. And there's a trend in industry and business overall that is undefeated. And this trend is this. And so since, let's call it the turn of the 19th century. In 1914, I believe the statistics were only 10% of people in the United States owned a car. All right. By 1928, 60% of people in the United States owned a car. In 1928, there were something like 400 car companies. Right. They're just car companies everywhere. Right, because of the growth of cars in America. Yeah. By the 1960s, something like 60% of the United States owned 2 cars. Household had 2 cars. Right. How many car companies, meaningful car companies, existed at that point? You get to the 70s, we went from 400 down to 5. Right, and by the way, 5. We're now at 5 to 7 meaningful car companies, and they've even shifted, right? There's only really 2 or 3 meaningful American car companies, if you want to throw Tesla in there. And then there are a couple of German meaningful car companies and a couple of Asian car companies that are meaningful. So you go from 400 at the peak of growth to, less than 10 globally now. And, 90% of households have 2 cars. Probably 40% have 3. So that has happened for every industrial or technological advance without question over time. Happened with, the tech boom in computers. Let's just call it computers, right? We've moved on computers in terms of the tech boom. But there was a time where there were hundreds and hundreds of companies that made actual computers, desktop, laptops, and the like, right? In the 1980s, when the boom actually happened, the personal computer became a big thing. Throughout the 80s and 90s, there were hundreds. You and I could name off the gateways of the world, all sorts of stuff, right?
Yep.
Until there wasn't. And now, when you go to buy a computer at Best Buy, it's either an Apple, a Samsung, or an IBM, or an IBM knockoff that's not called IBM, Lenovo or something.
Yeah.
And Dell. And that's basically what we're left with. We got IBM and Lenovo versions. We got Samsung, Dell, and that's basically it. There's 4.
Yeah.
We went from hundreds and hundreds down to 4. So in every industry, that's how it goes. In the online trading industry, about 20 years ago, it exploded, and there were companies everywhere, right? Well, the largest companies now have basically taken over most of that space. TD Ameritrade, bought by Schwab. E-Trade, bought by Morgan Stanley, right? So those brands, while you can still go maybe to, Thinkorswim or whatever, it's owned by Schwab. E-Trade, owned by Morgan Stanley. Now we have a little bit, Robinhood has popped up. We've got a little bit of Webull or some stupid stuff that most people don't even know about. But consolidation. We had hundreds and hundreds of them, and then we didn't. And so same thing is going to happen with Bitcoin treasury companies, right? There is going to be a run up that will be extraordinary, right? It's going to be a run up this bit. We're living in it right now.
Yeah.
If you have the opportunity to get in at the let's call it the pre-IPO level of one of these Bitcoin treasury companies, good idea. It's probably a good idea for the next 3 to 6 months to do that. Because they're going to run up, because that's been the trend so far. But after that, do you hold on? How long do you hold on to that stock? You have to be in the same way from a trading standpoint. You've got to have parameters. It's got to be rules based, all that stuff. This type of investing has to be very, very rules based. There's not going to be a Bitcoin treasury company, sorry Michael Saylor and sorry MicroStrategy, that's going to turn into the next Apple or Google or Amazon. It's not going to happen. It's just not going to happen. So, act accordingly. Be careful.
Yeah, no, I think that's, you bring up some great examples there, and, that's the whole thing. When we talk about things on here, I don't know if a lot of the viewers get it, but, again, we've been doing this for a really long time, been with the markets and whatnot. And, we derive a lot of what we think is going to happen and how we think things are going to go based on how it usually happens, right? There's a general narrative that repeats itself over and over again, not just in life, in business, but in markets. And, this whole Bitcoin treasury thing is exactly like that. Everybody gets in it, becomes a big thing real quick at first. And then it falls out, and you've got a few people that kind of continue on with it. But again, you go from your hundreds to your tens, or, your less coming in that. Now, does that mean that Bitcoin is not worth being in? Not at all. Not at all. This whole idea of the Bitcoin treasury is one kind of, one arm of, what's coming with Bitcoin. So, you have to take it for what it is. But, markets tend to move in cycles. Liquidity tends to move in cycles. And we just note that the hype comes up during these times when, when that cycle's really building toward the end there. That's when you get all the hype. That's when you get these things that happen that don't last, right then. Everybody gets all excited right there, and then it crashes, and then you have everybody going, oh, look, it was such a terrible thing. Look at how it ended, blah, blah, blah. But it was not the realization of what it was. It was the hope that it would be, hey, I can get into this at this low price and ride it up for the next 50 years on that, which is not what you do at the beginning of some sort of hype toward the end of a cycle where there's a hype coming in on it. You wait for that to kind of come down. You wait for that cycle to end and pull back. And then you go in, again, look at Amazon. Amazon, 1999, right, versus today. 1999 is right there before the dot-com bubble.
Mm-hmm.
And, again, getting in right then wasn't as good as getting in after it came crashing back down, right? Everybody started to get hyped up when you got to 2000 with all the technology. And, of course, Amazon being one of those front runners there. Hell, even MicroStrategy was one of the high flyers then, right?
That's right.
And look at how many of them jumped on this internet boom, jumped on the technology boom back then, rallied up, what was it, pets.com? I mean, God, there was so much stuff back then. And we don't see it anymore today. Most of it's not here.
Yeah.
But technology has continued to increase. The internet has continued to expand to Paul Kruger's kind of, demise, I guess you could say. Wasn't going to have any more effect than, what did he say, the fax machine or something?
Yeah, it wouldn't be any more meaningful than the fax machine. It's just there are it's just really interesting. There's a reason why the commentary is really focused around Bitcoin treasury companies, and it's capital loves capital.
Yeah.
And so if you have the opportunity, by the way, somebody just commented, I know a Vegas hangover when I see one. I don't drink and never have drank, so no hangover here.
Other than coffee, right?
Yeah, that's correct. But it's I'm just letting people know that are listening to this stream that in the same way that I knew that GameStop was going to buy Bitcoin and continue to buy Bitcoin, in the same way that I know that another big corporate is coming, in the same way that I knew that Vivek's, Strive was coming and others, this is going to be a movement, and this is going to be the narrative over the next year, right? This is going to be the narrative over the next year, is Bitcoin treasury companies and Bitcoin on corporate balance sheets. It's going to be the dominant narrative, just like in 2023 and the beginning and through most of 2024. The narrative was ETFs, right? Yeah. Bitcoin ETFs, and then follow on Ethereum ETFs. That was the narrative. That narrative is now shifted to a point where we're at now, and that narrative is going to be Bitcoin treasury companies. Give me one second. Go ahead, Chris. Keep going.
All right, yeah. So one thing I want to kind of point out here was that I made a post not too long ago about Bitcoin and how a lot of new entrants into the market are like, oh, well, I'm not going to buy Bitcoin. I'm going to buy this shitcoin because I can't get rich on Bitcoin now. And the one thing I want to point out about that is, first of all, you have to look at that mindset. If that's your mindset, you're not going to get rich anyway. I'm going to tell you right now, and Andrew will back me up on this. We've been in markets for decades, guys. Listen, if your ideal is that you don't want to get in Bitcoin because it's not going to materially change your life in the next 300 days, that's the wrong reason to be in the market for anything. Because what you're doing here is you're chasing emotion. You're not being realistic. If Bitcoin was to go to, let's say we kind of push up here and then we pull back to 102,000, 100,000, something like that, right? And by the end of this year, so 6 months from now, let's say that thing runs up to 150,000. You are getting a 50% return in 6 months, okay? First of all, guys, if you're getting in Bitcoin, let's understand, you should be getting in Bitcoin for this idea that you want to protect what you currently have, no matter how small it is, against the devaluing of it as inflation continues to rise. That's your first reason for being in Bitcoin. It's a very important reason, okay? Because if you're thinking, oh, I want to create more money without protecting what you already have, you're going to lose both, all right? The second thing is you're not trying to get into Bitcoin to get rich compared to shit coins.
Mm-hmm.
That's like jumping into the pink sheets in stocks and hoping you can get some 10-cent stock that's going to jump up to $3 in the next year or something, right? It's most unlikely not to happen. But y'all come in with this mindset that you're not going to get into Bitcoin because you're not going to go from, say, a net worth of $100 to a net worth of $500,000 or $1 million over the next year. And I'm telling you right now, as somebody who's been doing this for a very long time and talked to, tens of thousands of people over this time that I've been doing this, almost 31 years now. If you're coming in with that mindset, if your idea is to come into the market so that you can go from basically $100 net worth to $500,000 or $1 million net worth or more in a year or less, especially, you're not going to do that. And so not only are you not going to do that, so you're going to lose your money that you're trying to do that, but you're not going to get the benefit of what you would have gotten had you bought Bitcoin to protect yourself against inflation rises and global liquidity increases that continue to go on year after year, decade after decade. And there is no reason to believe this is going to stop, guys. There's absolutely no reason. All right. Even Trump's big, beautiful bill it's set to increase the amount of money government's spending.
Well, I listen, I spoke on the whale stage yesterday, and I thought that the most important point that I made was, hey, the one person that matters most to Bitcoin price, over the next 3 years isn't at this conference. And but everybody knows who he is, and that's Larry Fink. And Larry Fink will continue to say, and there are representatives from BlackRock here that did speak yesterday, and talked about 1% to 2% allocation of portfolios in Bitcoin. Remember too that BlackRock making that 1% to 2%. Sort of announcement, right? That's where they want people to get. They're the ones telling everybody to do. They have an enormous amount of influence over clients deciding what their actual portfolio allocations are. Enormous amount. So we're going to get there, right? And if we get there, Larry says we're going to 500 to 700K. So I'm sorry. If you can't, if a 5x return on your capital, even if you put, $5,000, $10,000, $50,000 into Bitcoin now, you're not buying a whole Bitcoin. But if a 5x return on your money in the next 3 years doesn't work for you, I don't know. I mean, you're better off, sitting down with me at the casino. There's a better chance that, I guess I 7x my money, the other day, but that's a 1 in 10 chance. That's not going to happen again. That's why I'm not going back to the tables while I'm here, because I guarantee you it will find a way to get out of my hands.
Lose it all back, right? Yep.
But that's the point with Bitcoin, right? Is you're going to be able to be involved in spot Bitcoin and then Bitcoin adjacent type of products that if Bitcoin does do a 5x from here, which Larry Fink and BlackRock expects it to do. Him talking about price, he's never done that on any other product, any other asset, anywhere ever. So that's where it goes. And for all intents and purposes, you're over allocated to Bitcoin and Bitcoin products. You're going to get extraordinary returns. You really are. And so let me give you an example. I'm the co-founder and COO of Arch Public. We're here at the Bitcoin conference. So I'm here to talk about Arch Public, right, at the conference. So just Bitcoin itself, just spot Bitcoin, and then the volatility associated with it. We have a Bitcoin algorithm that runs an arbitrage strategy from February 1st until last Friday. Here's what that strategy did. And this is more about Bitcoin than it is even about our tools and strategy. So Bitcoin, if you use the strategy with $100,000, that's what all our case studies are, you ended up with an additional 1.38 Bitcoin, even if you funded it with Bitcoin or with fiat, an additional 1.38 Bitcoin. Okay. The average price of that 1.38 Bitcoin was $83,000. Okay. So extraordinary executions there. But on top of that, you generated more than $21,000 in 4 months, by the way, of cash yield. So that's what I'm talking about the power of Bitcoin in Bitcoin adjacent products. Just in 4 months, you ended up with a 30% return on your Bitcoin, additional Bitcoin at a significantly reduced price to where we are today, and cash yield on top of those performance metrics. Point being is, Wall Street is going to embrace Bitcoin in a huge way because it's a new asset that they can price differently than everything else that is commoditized right now. They can make more money off Bitcoin and Bitcoin products, and they're going to do so. So if you only are in Bitcoin and nothing else for the next 5 years, you're going to do some extraordinary things.
Yeah, yeah. I mean, it's hard to argue that you wouldn't, right?
No.
Especially, I mean, of course, future performance is not past performance is not indicative of future performance, but again, when you're doing these things, we're looking at, well, what's that next step? Where does it kind of continue from here? And even though we're talking about the Bitcoin treasury idea kind of bubbling up, becoming a bubble here at the top of this cycle, maybe end of this year, beginning of next year. Overall, Bitcoin itself should continue to overall rise, right? Now we're going to have pullbacks along the way, but you have to get out of the short-term mindset. If you're really talking about, if you're coming to talk to me about Bitcoin and you're talking about Bitcoin in 3 years and 5 years and 10 years from now, don't come to me whining about Bitcoin, what it's doing today or tomorrow or next week. You see what I'm saying? Because your mindset is not aligned with what you're trying to say. And that's going to cause you to lose a lot of your money when you're in markets. It's not just Bitcoin, it's anything. If you say, listen, I'm trying to get, I think this asset's going to get from point A to point B, and that's a multi-year time frame, but then you're wallowing in what's going on the day-to-day, the weekly, or God, some of y'all, man, the hourly, the 15-minute, the 5-minute. I mean, come on. You're just going to cause yourself to pull out of that. And what's going to happen is, because I did this at the beginning myself, what'll happen is 3 years from now, 5 years from now, when it's doing anything like you were thinking it might do, because it will, that pretty much almost exclusively happens all the time. Yeah. You're going to kick yourself over and over again. Why the hell didn't I just hold? A lot of y'all have been around Bitcoin since I have, 2017, earlier, and you have probably lost a lot of money trying to learn how to trade during that time. And now you sit here, I'll bet you've gone back and you said, if only I had put that into Bitcoin at this point, I would have this much Bitcoin worth this much money now. And that is a tale as old as time when it comes to traders, guys. So you have to be realistic about it.
If you'd have bought, other than this past weekend when it hit 112, right? Other than that, if you'd have bought at cycle tops the last 4 cycles, you would have enormous amounts of Bitcoin and capital, enormous amounts. Buying at cycle tops, right? Yep. At cycle tops. So a cycle top at 69 when Bitcoin was leveraged to the hilt with the likes of FTX, Luna, 3AC, Genesis, all of that stuff, just absolutely leveraged. If you'd have bought then and you're still holding today, you literally almost 2x your money right now. So yeah. it is, we're in a position now where we're going to see price accelerate, I think, over the next 6 to 12 months because of the Bitcoin treasury stuff, the constant inflows. We're going to stay above 100, right? I think there's a world, I think there's a world where we get to, 275K and then there's this huge crash pullback to 190. Okay. But that's what the media is going to say. The media is going to say, holy smokes, Bitcoin's crashing down to, from 275 down to 190, which I think would be about a 40% number, right?
But it'll be the most dollars it's ever crashed, and that's what they'll focus on.
Right. So they'll say, well, in the last 3 months, Bitcoin is down, $80,000, right? And it'll be no different. Yeah, it'll be no different than how they cover the Dow Jones. So the Dow Jones is down 1,700 points today. Well, it's it was at 45,000.
Exactly, right?
Like an absurd number. So listen, I think the overarching theme here at this point is, Bitcoin treasury companies here at the Bitcoin conference. Again, I know for a fact, based on the conversations I had with, now I'll just say this, I'm not going to name names, but there are, pretty significant, I hate the term KOLs, because half the people that are even in crypto, when we say KOL, don't even know what the moniker stands for. As I sit here right now, I can't even tell you what it stands for. Something thought leaders, or I don't know, opinion leaders, I don't know. Influencers, right? So let's just call them influencers. Everybody knows what that means. Influencers they themselves are going to be standing up Bitcoin treasury companies. I also think that there will be a bubble in Ethereum and Solana with Ethereum and Solana treasury companies. I think that will happen too, because I saw a couple posts yesterday about a company that's doing the Bitcoin treasury thing, but they're doing it with Ethereum. And it was a serious post. It was a company. It was an ongoing, I don't know if it was publicly traded, but it was an ongoing, entity that was decided to go down the path of not keeping cash on the balance sheets, but rather they're going to do it with Ethereum. Same thing is going to happen with Solana. I saw another company that announced a Solana treasury strategy. So my point is this is happening it really is happening at light speed, right?
Yeah.
We've got, over the past month, we've had Jack Mallers and 21 Capital, Tether, huge, the deepest pockets you can think of. SoftBank involved on that one, right? And then a week later, you get Strive. I think a week before that, there was Strive and Vivek Ramaswamy, right? His firm. And then a week after that, a week and a half after that, it's now Nakamoto, Naka, David Bailey, Bitcoin Media, and all that stuff. Now we've got the Trump Organization, $2.5 billion. Now we've got GameStop. Now we're seeing the trickles of Ethereum strategies, corporate strategies, Solana corporate strategies. So it may not take, 6 months for this bubble to grow and then burst, or 12 months for it to grow and get burst. It may take 3 months. I don't know. I just know that it's happening right now. It's happening fast. And it's everywhere right now here at the conference. There are influencers that Scott and I came across that are in the process of setting up multiple Bitcoin treasury companies.
Yeah.
Not just one, multiple Bitcoin treasury companies, because they feel like a lottery ticket right now. If Nakamoto, which I hope nobody at Nakamoto is watching this, but 3 years ago, I was at Bitcoin Conference's office, like BTC Media, Bitcoin Magazine. I can't believe they put a conference on with 30,000 people. There was like 7 people there. There were T-shirts everywhere. I was like, how did they do a conference? And these are their offices. Like, what's going on here, right? So those people just raised $700 million, and now that's Bitcoin Treasury called Nakamoto, which is the title sponsor for Bitcoin Conference this year. Okay, so
you couldn't do it, huh?
Well, right. No, we did the best we could. So, if that's happening, and you got in and you you got in pre-IPO at $1 and it's now $27 or wherever it is today, you're darn right that there's going to be people trying to do it like crazy. It feels like the ICO craze of 2017.
I've held my, I'm going to tell you right now, I've held my tongue at least 6 or 7 times this conversation, not to say ICO. I'm glad you said it, man, because that's what exactly.
It feels like it. It really does, because it's people are throwing money at stuff, but they're smart people, so they think that they've got a thesis that's going to work. That Bitcoin is hard money, blah blah blah, treasury company, blah blah blah, all that stuff, and we're just going to find ourselves in a position where second tier, third tier, fourth, and fifth tier companies that do this are going to do it on leverage, and it won't have a happy ending, right? And there'll be 4 or 5 or 6 of them that make it to the other side, and they'll probably be fairly significant and profitable companies. But until, we'll see how it plays out.
Yeah. And so what does that mean for y'all listening in? That means, hey, after it happens, you're going to have the opportunity to buy some cheaper Bitcoin at that point. Probably won't be cheaper than what it is now, though it could, it could. But if so, probably not a lot cheaper here, right? But you'll have the opportunity to buy that cheaper Bitcoin. And so if you're interested in Bitcoin, if you're interested in that, then hey, there you go. Now, something Gary Cardone and I have talked about quite a bit in the past is this idea that, even if you're trading, even if you're doing these things, and I have not been quiet about this, I've been very, forward about this. Bitcoin should be something that you have, that you're buying and you're holding. I believe that. Just in my personal opinion, I don't think there's anything else you could buy and hold better than Bitcoin. And so along with that comes the idea that, listen, what you need to be doing is figure out how do you make an extra $1, an extra $10, an extra $50 so that you can buy more Bitcoin. You're not worried about, I can't buy a full Bitcoin. You're not worried about, it's only this little bit. You're just in this mindset that you're trying to get as much of that Bitcoin as possible, with the idea that it's going to protect you against continued debasement of fiat currencies, not just in the US, but across the world, guys. Listen, the dollar is not going to have, we're not going to have, I've been talking about this for years now. The dollar is not going to go crashing hyperinflation anytime soon. That's not happening, okay? I remember I responded, Jack Dorsey posted like back in 2020, I think it was, about that. And I said, hey, listen, I appreciate the other things you do, but you are dead wrong on this. It's not happening. Man, I got so much hate back then. Here we are 5 years later, we are nowhere near hyperinflation. Now, that doesn't mean you go, okay, well, it's fine. I'm not going to protect myself against it. If you have anything, you should be worried about protecting that first and then getting more. All right. But this is the different thing. As human beings, we tend to focus on getting more of a thing first rather than protecting what we have. So, again, just my personal opinion is, listen, if you're going to tell me I'm not going to invest in Bitcoin because it's not going to make me rich, the first thing I know is you're going to lose everything you're probably putting into the market, into everything else, because your mindset is wrong as you're getting into the market to begin with. And that's going to cause you to make emotional decisions that are going to be detrimental to what you're trying to do. But the second thing is you don't really understand what Bitcoin is there for. And before January of last year, as Tillman's pointed out, it was all underground. After the ETFs came up, that became Bitcoin coming above the ground. And up to that point, you could get into Bitcoin and probably, get rich if you held on to it. Most of you didn't, though, right? But guys, listen, Bitcoin is not about getting rich. It's about protecting you from those who don't care and who are going to continue to push out more and more fiat into the world. That global liquidity is going to continue to grow, which is going to reduce your purchasing power. As long as you have Bitcoin, you can work on that, right?
To be fair, again, if you're able to 2x your money in Bitcoin, just spot Bitcoin over the next 3 years, that's like let's call it a 35% return each year. It's 105%, but that is, you're crushing the traditional markets at that point, right? And
Yeah.
I know we're in crypto and all of that stuff. There's narratives associated with 3x, 5x, 10x, 100x. It's all stupid. But reasonable, meaningful people that are thoughtful with capital, that want to keep growing their capital, a 35% number is a really big number, man. It's a
Huge.
really big number. And oh, by the way, that 35% a year number is not taking into account inflation, right?
Yeah.
So I'll get reply guys, when Bitcoin was at, I don't know, 95 or 100, or when it moved from 75 to 105 or something, and I was like, Bitcoin is up 40% in 40 days or whatever the number was. There's some reply guys, but Bitcoin is up 40% in 4 years. Well, of course, he's picking out a moment in time associated with the 69K top, blah, blah, blah. But what he's not taking into account is inflation. So over that 4-year period, inflation is probably 25 to 30%. Anybody remember being able to buy a $1 McDouble at McDonald's? Can't do that anymore. Or a $2 cheeseburger? No, they're $5 now.
Yep.
At the cheapest places for food, the McDonald's and the Chick-fil-A's of the world, it's insane, right? My household, we've got 6 people at my household. If I go to grab a quick Chick-fil-A and have it ordered to my house for everybody, it's $150.
Yep.
I'm not kidding. $150. It's okay. So you take away the delivery fee and whatever. Now it's $130. That's outrageous. You would take your family to Applebee's or something, and it'd be $100 10 years ago for a family of 6. Now ordering Chick-fil-A is $150. So my point is that those idiots in my replies, it's also up 40% in 4 years. Well, okay, now add 25 to 30% inflation to that number, right? And it's a it's a multiplier, right? So that's the difference, right? So when you look at it from an inflationary standpoint, when you look at it from the reduction in the value of the dollar and the increase in the price of Bitcoin, the percentages just simply go higher every time is the point. And that's even though the Trump administration has significantly reduced inflation since in the past 6 months, it still exists. We're still in that 2.5 to 3% spot for all the things that we do and buy and engage with on a daily basis. So it's buying Bitcoin and putting yourself in a position. The other point I made on the whale stage yesterday, which I thought was just as meaningful as the Larry Fink point, is in 20 years ago, there were 8,000 banks in the United States, right? Now there's, I think, 4,500. So half of those banks are effectively gone, but not all of those banks were failures. But 10% of those banks from 20 years ago flat out failed. In other words, if you had more than $250,000 in your account, you lost that money. Then the FDIC only gave you the $250,000. So the point I was making is there a better chance that Bitcoin goes to zero, or one of the 3 banks that you use to make sure that you don't go above that 250K level, but you probably do in some of them? Is there a better chance that that bank fails? There's a better chance that that bank fails. So Bitcoin is protection, right? Bitcoin is protection not only against inflation, but against catastrophic fiat risk associated with the American dollar system, right? So there are additional benefits to just number go up, right? By the way, those benefits don't exist with Pepe coin or fart coin or whatever coin that exists out there that's not Bitcoin. That doesn't exist. So here's another thing too to be aware of. Berkshire Class A stock is, I don't know where it's at, but the last time we talked about it was at 800K, right? Could be at 700, could be 800. I don't know what it is. But people were talking about that stock being, that's way too expensive to buy when it was at 100K.
Yeah.
When he was at 100K, I can't, I like Warren Buffett and all the thing. He does the Omaha deal, and he sounds like, speaks like me, and lives in the same house, and that makes a lot of sense. And railroads and insurance and dividends, all that stuff makes a lot of sense. But 100K is too much. I can't. That's too much for me to buy. We're at the same spot with Bitcoin right now, guys.
Yep.
Don't think that 107 is too much to buy Bitcoin, because it's going. You think, is there a world where Bitcoin doesn't get to the dollar equivalent of Berkshire Class A? No, it's going to happen. It's going to happen, and you'll look back and say, I thought it's too expensive at 100K. Boy, was I stupid.
Well, that's one of Gary's favorite stories. I think he's probably told it with y'all as well. I think it was like late 90s or something. He had the opportunity to buy into Berkshire, and he said, no, because of this and this. And he goes, man, that would have been a great buy back then. But it's always that hindsight is 2020, right? When you're young and dumb, which we all are at some point, right? You're chasing those fast returns. You're saying, how much money can I make overnight, basically, rather than taking the much more feasible, the better approach, which is, all right, let's take this seriously. I'm trying to build my wealth. I'm being honest about it and serious about it. I'm not trying to hope I can, score a triple home run, today or something like that.
By the way, shout out to this Rick Peters guy in the comments, right?
Roy?
So, yeah, Roy Peters. He's talking about, Bitcoin did protect him. He lost his job, and it took 6 months for new income to come in, and Bitcoin, bridged the gap there. And also talking about, him and his family really getting into Arch Public and what we do. But listen, used 5% of his Bitcoin holdings to keep his family fed. And after that, I can't not buy Bitcoin, going forward. And that's an extraordinary thing, right? That's a real world example of Bitcoin fighting inflation and the debasement of the dollar being a sickness that exists in the United States. And Bitcoin is the cure. That narrative's never going away. I don't care about what bubbles and Bitcoin treasury companies and balance sheet and ETFs and all that stuff. The reality still exists that, Bitcoin is a safe haven. No question about it. And so kudos to you, Roy, and what you did for your family there.
Yeah, I think in a big way, that's what we try and do here with everything we talk about and the ways we discuss things, and leaning on experience and whatnot that we all have, the three of us, even though Tillman isn't here, screwing around somewhere. But anyway, but that's the point, right? We're trying to get people to move out of this mindset that we all have at the beginning, and such a significant portion never actually get out of, which is this trying to get rich quick, and how that actually ruins you, how it actually causes you to lose. And you're going through these things, like we've all been through this, where you neglect to get into something earlier because you're like, oh, it's not going to provide me the returns I think that this other thing will. And then you jump on that hyped other thing, you end up losing your money in that. 5 years later, the thing you should have got into is doing, really well. And you're like, man, if only I had done that, This is the idea, guys. It's about changing your mindset. How do you approach Bitcoin? Do you approach it with a poor mindset, or do you approach it with a growth mindset, right? Mm-hmm. And it absolutely has to be the latter, because if you come in thinking like a poor person, and I don't mean that to be disrespectful, but I'm calling it out for what it is. Mm-hmm. I was there when I first started as well. That's why I can speak so freely about it. If you come in with that mindset, not only will you miss the opportunity with Bitcoin, but you're going to end up losing everything, and probably more, doing the other thing. You have to understand what Bitcoin is about. Why are you getting into Bitcoin? It has to be something more than number go up. Anytime you get into trading or investing, it has to be something other than money go up. I made a post at one point on Twitter, on X there, that said, it was a quote from I can't remember who it was, from a famous trader. And he said, there's got to be more as a trader. There's got to be more to it than simply making money. Basically what he's saying is money was the byproduct. There had to be more of a reason to be in there. And that's what it is. A lot of people come and they're like, oh, I want to make $100,000. I want to make $1 million. Well, that isn't really what you want to do. I mean, you want to do that, but for what reason? And until you can articulate the reason, you're going to have a lot of trouble even getting started going in that right direction. You're not getting money to jump around in a big old coin thing like Scrooge McDuck and swim in it. That'd be nasty. First of all, that would be absolutely nasty. But that isn't why you guys are in the markets. That isn't why you're buying Bitcoin. It isn't just to have more money. What does that more money mean for you? So what does Bitcoin mean for you? It protects what you have.
Yeah.
It provides some stability in a world that continues to borderline be unstable. It continues to print fiat. Again, not just in the US, but in the EU, in the UK, in Japan, everywhere. Everybody's printing more and more fiat, guys. What are you doing to protect yourself against the resultant loss of purchasing power? My big food story is we really enjoy Cane's. If you guys haven't had Cane's chicken, I don't know what you're doing.
Delicious.
Absolutely. And their sweet tea is just out of this world. But anyway, but just, those of you know that I had, when my brother-in-law passed away during COVID, I moved my sister and my nephew and my mom down, and I've been taking care of them ever since. I take care of my son. So we've got a house of, 5 people here. And so when we used to go to Cane's just 2 years ago, it was barely $50. Yep. I go now, it's almost $100 now, 2 years later.
Yeah.
So, the reality, it's crazy. I remember 2004, I was living in San Angelo here in Texas. And there is a steakhouse out that way called Lowakey Steakhouse. And if you know, okay? Middle of nowhere, absolutely amazing. But I took out, I think I took out probably about 20 of us, some family and friends and whatnot out there. And I paid for it. And it was all this steak and everything. And I think I paid before tips, I think I paid $150 or something like that. That was in 2004. Wow. I would be scared to look at what I'd be paying today. And this place,
if you took 20 people now, it'd be $1,000 at least.
Oh, it would be so incredible. And that place, had it wasn't just like a run-of-the-mill steakhouse. This is people traveled from places to come to it. It was that good. So,
anybody? I'm old enough to remember the dollar menu at McDonald's. That doesn't exist anymore. It's gone. The dollar menu is gone. And on the dollar menu back then, you could get, again, a double cheeseburger. The hamburgers were, 79 and 89 cents, but double cheeseburger was $1. There was like 7 or 8 things that were $1 at McDonald's. Now, listen, I'm not advocating that we all eat at McDonald's. That's a bad idea. But at the same time, it's very, very indicative of inflation. When inflation gets to the point where the cheapest access to food is now severely inflated, right? Yeah. Somebody needs to look up the real cost of a double cheeseburger at McDonald's. You know what?
You are stuck on this double cheeseburger today.
Do it right now in DoorDash. I'm going to do it right now. This is real time data and access at Beers with Bitcoin. Okay? That's what we're doing here. All right, here we go. So a double cheeseburger. What's the cost of a double cheeseburger? Come on, baby. Show me what you got. A double cheeseburger is $4.39. It's $4.39. So it was on the dollar menu a decade ago, right? So again, that's what we're dealing with here. 4 years ago, the inflation rate for a double cheeseburger at McDonald's is up 439%. That is extraordinary. And it probably not the greatest example or case for buying Bitcoin, but the data doesn't lie. The data doesn't lie. When you go from $1 to $4.39, that is that is nuts. That is nuts. And so, and again, that's not going to slow down. And by the way, it never goes backwards, ever, ever, ever in the United States. We've never been in a spot where it goes backwards. The only time we went, some version of what we had to pay for went backwards was the great financial crisis and mortgages / homes going slightly down in value because oversupply and the actual GFC, right? But that lasted for, I don't know, 12 months tops. Lasted for 12 months.
Get it now. Yeah.
Within 36 months, we were back to what the prices were. And then from there, prices for homes have basically nearly 3x'd from where they were at the great financial crisis, right?
Yep.
I could go look at a couple houses that I owned back then, and they're 3x what I paid for them back in that time frame. So inflation never goes backwards, never does.
Yeah.
And if it does, that means everything else has gone to shit, and so you've got other problems. But it is, I still can't believe I looked it up, and a double cheeseburger is $4.39.
And that's at McDonald's, out of all places. That isn't even quality. So we got other guys mentioning here $9, $12, and whatnot.
Yeah, right. So $9, $12. Yeah, Five Guys. Five Guys is good stuff. Whenever I want to have eat like garbage gut, for half a day, and I really want to get after it, I'll order up some Five Guys, and they got 100,000 fries in there because they give you more than the thing, and they dump them all in the bag. That's good stuff, man. But it's extraordinarily expensive.
Yeah,
it really is.
If you're going to spend money on burgers and you live in Lubbock, let me tell you guys, I was there for law school. There's a place over, I believe it's still there, called Twisted Root Burger Company. Go there. If you're going to spend money on burgers anyway, it's going to be expensive anyway. You can go there. You can get all different kinds. You can get ostrich. You can get bison. You can get all this different kind of burgers there. So I'm just telling you guys, try at least once. If you're in that area, try at least once in your life. I don't think you'll complain about it too much. Mm-hmm. But anyway, yeah, that'll do it. That was an hour there. So good times. I know Andrew's got to at some point leave his room. Maybe he'll go be social today.
Well, I'm now completely obsessed with the price of burgers. I'm now looking up Five Guys on, and it's $11.63 for a cheeseburger at Five Guys.
It's crazy.
That now again, the way my world is set up, when I order that stuff for my kids or my family or whatever, or McDonald's or Chick-fil-A, I don't give it a ton of thought as to the cost.
Yeah.
But it's really something. Again, inflation doesn't. Again, here's the best way to look at it, right? So the price of eggs have come dramatically down, right, from where they were 6 months ago. But where were they 5 years ago?
Yeah.
Significantly lower than they are now after coming down. So again, over an extended period of time, inflation doesn't go backwards. It simply doesn't. So yeah, great conversation today here in Vegas. If you see me walking around in the space, say hello. Happy to chat with everybody. I've met a bunch of you.
Unless he sees you running the other way first, unless he sees you and starts running the other way first.
I would never do that. I've had a wonderful time meeting people, and our Arch Publix lounge is open. Everybody from 12 to 6. We've got an open bar and two bartenders that'll serve you there. We've got a Bitcoin focused drink that's orange that we're serving people. Scott's actually going to do live Macro Monday, but on a Wednesday at 1:00 with Weisberger and I think James Lavish in our room. The room is Murano 3205. So you just go up the escalator there in the conference space, and it's to the left. But Murano 3205, you can come and hang with Scott Melker live, hang with me live, hang with Tillman if
I wouldn't put Tillman there. He may not show up.
not dead. I don't know where Tillman is. He still hasn't gotten back to me. I'm mildly concerned about Tillman's well-being at this time. But yeah, come and see us. Come spend time with us. Happy to spend time with everybody. We even have really comfortable furniture in there if you care about that. So it's a place to sit, chill, relax. It's general admission day here at the conference, so it's completely insane. And we started the day with JD Vance's talk, which means everybody got here, at 6 a.m. local time. So yeah, come spend time with us. We're happy to host you.
All right, man. Well, I appreciate you joining in, even though Tillman couldn't make it. And I know you had that call there earlier, which had us push it back a little bit. But business be business, right? You got to take care of that.
That's right. That's right. Thanks for being flexible, Chris. I really appreciate it.
For sure. Well, it's not even so much me, more the audience here. So, hey. But we got over 1,500 people watching, which is fantastic. Appreciate y'all joining in. Be sure you hit the thumbs up, hit the like, follow us, all those fun things, guys. Share the video. Get us out there. I'm sure you'll do much better marketing than we'll ever do. It is what it is. But we're going to work on it anyway. That said, as always, remember the only thing you control is how much you lose. So, whether you're investing, whether you're trading, no matter what you're doing in life, make sure you're always working on your risk management. Risk management doesn't keep you from having fun, but it does keep you from losing your life, right? And then that's or your livelihood. And that's important. So
I gotta go, man. We'll see you. Appreciate you.
Y'all take care. We will see you next week, guys. Thanks, Andrew.